We work in food security, we work in environmental projects, social challenges, housing, affordable and supportive housing projects, just about anything you can think of where someone's trying to move the needle for the better inside of community. So if you think about lending, every which way that debt financing could be used, we've done one of them at some point or another. We use money to scale companies, we've used money to stabilize organizations, mortgages for nonprofits who want to buy buildings, just about every way that debt financing works. We can do equity, but we've pretty much found that lending is where the sweet spot is for us and where the real need is.
All of our investors share the characteristic that they're motivated in having some other impact than purely a financial one. But they're all interested in their investment producing some result which is not purely a financial result. The investors come in based on how much impact do they want and what is the measured return they take for it, and they will select themselves either across all of the product or within certain products. We do try and offer a financial return which is commensurate with the risk that we're asking the investors to take. You know, we don't want a big concession on the part of investors. We want to give them a fair return. We do point out that the risks are going to be differently measured in the kinds of funds we operate than you would find in conventional finance.
We know that social finance works because we've seen the results over and over and over again. Great jobs being created for the most vulnerable people in our communities. Housing for people who are challenged to be able to live in community. We've seen nonprofits stabilized that might not exist. We've been able to get them to the next place where they can actually continue their good work in community. Money gets paid back. I know people have a hard time believing this. Our organization, albeit we're small, but our organization is supported by the revenues that we earn through our interest rates. And we have a return which the accountants who are just finishing year end tell me this year's around 4% after expenses. That's not bad money.